Hey, good morning, everybody. Welcome to the Morning Vol Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to, well, our Morning Vol Report. um, Here's Mark's trade idea of the week. Give us your email address, and we'll be happy to. They're generally pretty good ideas that we post on Friday events. We have our masterclass running right now, but we also have Long Gamma and Owning Premium webinar as VIX gets into the extremely low areas. Could be, I think it's at least timely for kind of a more low vol environment. That is February 4th. Just go to our event page and sign up for that. Now, what do we have today? Well, so I think mostly we kind of have kind of the post-inauguration, let's just call it, we'll call it malaise maybe. Let me get that. That's what I wanted up here. Again, we had that kind of that Friday, the Monday markup from the weekend, and then the vols quickly dropped again. They started tanking vol Friday. There was a little bit of skew again. There's always a little bit to an event. You know, even if the event becomes a non-event like it did, but there was still a bit into it. And VIX or just volatility in general is just kind of sitting around. I mean, we have, I guess, what is it? We've had a 90-day period of realized vol, I think in the single digits. There's a bunch of statistics now coming out about that. We're kind of into 2 months into it. You know, we had the inauguration. That was November. Then we have December. We're into January. And we have earnings coming out, the bank earnings so far. We had the financials kind of last week, big technology this week. If we have good earnings, we could see, VIX could dip into the low 11s pretty easily. Doesn't take much. As long as there is some sideways to up. Sideways to up is generally a VIX killer. So we'll look for opportunities in different places. One thing we could see some is there are some contango trades that still look okay for VIX. We will address some of those in our masterclass this week. We'll also be looking at time spreads. We cannot get off this 2270 handle. So again, we'll look at those today and just look at some very short-term trading. You're already getting our vol is now in like 7.5% range, depending on where you are in the weekly cycle. But it's not very far to see if they could mark this down even more today. So if we don't have a lot of action, we do have some decent earnings out of some of the big cap technology names, at this point we're looking for a reason to move. We are getting a little bit of action out of the pound starting to move again. So we'll see. We'll keep an eye on this. Breaks it in, breaks it out. Since they are voting, we'll see if what that actually does to our market, if it even becomes a mild volatility event, which it could, and and then we'll just trade that accordingly. But for right now, there is not much as far as a sea change in what's been going on. There is some movement. There is not a ton of movement. And if anything, just some individual equities are starting to track, but it is a kind of a slow time until we see how the new administration settles in and what starts to happen. And maybe we'll get a little direction out of that. Maybe we'll get something on the non-farm payrolls, but the last 5-6 years of trading, all of these Fed meetings and Fed events, non-farm payroll numbers, they used to only be a really short-term change in volatility for those events. And because we got into the QE era, because there was such massive potential for dollars coming in and out of the system, that used to swing volatility really hard in what I would say is more fun tradable way, basically. And right now, it's more like, okay, we have an economy that's kind of doing something. It seems like it's kind of growing. Maybe it grows a little more. The global scene doesn't look awful. And you could have extended periods of time where volatility stays very low. Kind of more like the 90s, mid 2000s. Pick any part of any decade, middle of the 80s. I don't think any time in the 70s, but you go back in history and you can find really quiet periods of volatility, and that's what we could be in there for that for at least another month or two. Again, if earnings start to look okay, but once some policy changes, if they're major, come around, maybe that swings things a bit. So I think you kind of clamp down, and things could stay like this for a little bit. So still look for ways to generate income, maybe through positive data. So again, those are things we'll do in our chat room today. Try to figure out what's there. All right. But if VIX keeps going down, don't be terribly surprised if the market keeps doing what it's doing. All right, guys. Bye-bye.